Kenya's year-on-year inflation rate edging up to 4.14% in April. That's from 4.11% a month earlier. Consumer prices in East Africa's biggest economy rising by 0.95% on a month-on-month basis, pushed higher by food and non-alcoholic drinks prices. Let's unpack all of this. I'm joined on the line by James Gatutu, the Director of Production Statistics at Kenya National Bureau of Statistics. Thanks very much for joining us today, James. So looking at the numbers, which of course have just come through, if you could just run us through where we are seeing upward pressure being exerted on the inflation print in Kenya.
Yeah, inflation is 4.14 in April.
So run us through, because we're talking about food and non-alcoholic beverages rising by 3.57% on an annual basis and ticking up the most if you look at it on a month-on-month basis, up 1.85%. So looking at that, it seems like that's the key driver of inflation. Am I right by looking at that number?
Yeah, there's just kind of some food items that have gone up, including tomatoes, beef, tomatoes, and also sugar. The rest of the items registered decline, mainly.
So where are we seeing downward pressure? If you're talking about declines in inflation, run us through some of the key factors that are keeping inflation, I suppose, at these levels of around 4%.
Meanwhile, what is happening is that the kind of the weather this month is similar to the same that we had last month. So you find, because of the rain that is already ongoing, the situation is not much different. However, if you compare now with the same month the previous year, you find the increment by 3.57%.
Looking at electricity, down 7.6% on an annual basis. What's the outlook now for electricity prices? Where do you see that going when it comes to affecting also the overall inflation number?
The electricity is likely to go down, because you find now you find the major effect of the electricity cost in Kenya has been the cost when you are using the thermal generation. But with a lot of rainfall that we experience at the moment, this is likely to go down, because we now be able to switch into more hydro than thermal.
And overall, of course, also a factor to consider is fuel costs, given, of course, the oil prices has come back and has stayed around the $100 mark. And you've also got a stable and strong shilling, someone's saying. Do you see that kerosene and diesel costs will continue to fall back as they have had in the latest figures?
Yes, if the petroleum fuel cost goes down, then we expect some kind of improvement in terms of inflation. Because mainly in Kenya, the inflation is normally driven by the petroleum and also by the weather. When the weather is very good, the food commodities goes down. When the petroleum products are high, then you also expect them to push up the inflation. So this is also likely to go down.
So we had inflation. I mean, it looks like, if you're looking at the numbers we've seen for the past year or so, inflation sitting at 3.2% in December. Do you see that as the bottom of inflation bottoming out at that level? Or do you see inflation being able to come back from this just over 4% level right now?
Well, maybe the issue of expectation, I may not be able to comment on that, because as I told you, we are kind of depending on some external factors. That is the issue of weather and the issue of petroleum products, which you may not be able to have control over. But maybe if the current conditions prevail, then we expect the condition to improve.
Thanks for joining us today, James. James Gatutu, Director of Production Statistics at Kenya's National Bureau of Statistics.